Okay, good evening, ladies and gentlemen, and welcome to Thursday night's Ask the Expert panel. Tonight we are joined by Richard Silver, the Senior Partner at Silver Shemmings Ash, Jon Sharp, our Insurance Specialist Consultant Solicitor at Silver Shemmings Ash, and Darren Hahn, who is Strategic Business Planner and Head of Corporate Finance and Nordens, who's very kindly agreed to join us to give us some extra opinions on the furlough and loan schemes currently available as a result of COVID. As always, if you've got any questions, please put them in the Q&A panel in the toolbar at the bottom or in the chat box, whichever you prefer. We've got a couple of questions to start us off. So I will start with you, Richard, if that's okay. Have you seen an increase in disputes as a result of the shutdown and delays caused by COVID or indeed any other issues currently?
Evening, Julie. Evening, all. Somewhat surprisingly, I haven't seen that many disputes concerning COVID, or at least not as many as I would have anticipated. I've had many calls, but it would appear that most parties are aware of the problem and are dealing with it in a very simple and sensible approach and agreeing extensions of time. I've only seen one dispute where there has been arguments concerning concurrent delay and whether in fact the delay caused by COVID is the critical delay as opposed to pre-existing delays that the employer says the contractor is responsible. But one area I have seen in recent weeks really start to pick up is disputes concerning cladding. And no doubt the outfall from the terrible situation that happened in Grenfell. And I think the problems associated with cladding are not merely the pressure being placed upon landlords from the government and also from tenants in occupation and people from banks in trying to get mortgages, but I think it is also being caused by people being aware of limitation periods. For those of you who maybe might not be aware, where a contractor or for that matter a subcontractor or consultant has been employed, you have a strict regime as to when you can commence action, depending upon when the form the contract was placed. Where the contract is placed underhand, a party will generally have 6 years in which to take action from the date of PC. Where it's under seal, a party will be able to take it within 12 years. And the time stops when a party actually commences proceedings. So what many parties are doing is very simply sue everybody if in doubt, making sure you get within the limitation period, and then we'll fill in the gaps later. I should add there is one further action that we can take, which is negligence. And you can do that under the Latent Defects Act, and you have 3 years in which to take action from the date that you knew of the defect, you knew it was sufficiently serious to warrant taking action, and you knew who was responsible. But there is a long stop of 15 years, but obviously it's slightly longer than the 12 years that may apply under the Limitation Act. So my advice to you is, if you are a party that has this nature of problem, be mindful of the limitation periods. Equally, if you're a contractor and subcontractor, don't throw away the old contracts and documents thinking, well, it's long gone by, I don't need to worry. Because I am seeing this area of law very much picking up.
Okay, I know, Jon, you were shaking, nodding your head there because you were chatting about on one of our vlogs the other week about the cladding issue and the effect on the increase.
The only reason I was nodding was that insurers, after the tragic events at Grenfell, want nothing whatsoever to do with cladding, fire-resistant materials, etc. They put exclusions in their policies. And that's having just as a very practical example, my son's buying a new build property, which is less than 4 stories high. There's no cladding involved at all. But the surveyor has got to sign off, and he's not prepared to do so until such time as a fire inspector comes around and checks absolutely everything, etc. Because he will now have liability for any approval of any fire-resistant material excluded from his policy. So he's being ultra careful.
Mm.
That's a good reason.
Yeah, sounds like it. Okay, Darren, if I can just switch to you quickly.
Yeah.
Could you give us an update to the extension on the furlough scheme and also the business loan schemes that have been operating?
Absolutely. Evening, everyone. So an update with regards to the furlough scheme. It's pretty much exactly what it was the first time round. It's still 80% of your employee's monthly salary, capped at £2,500 gross. Employers do have to pay the employer's national insurance and pension contributions for the auto enrolment. The scheme applies to whether people are full-time, part-time, agency work, 0 hours. It's pretty much everyone applies for it, and they don't have to have been on furlough previously to be on furlough this time round. Now, the situation with who applies for it though is that they must have been on the payroll as at the end of October, so the 30th of October. Employees that have been made redundant are actually able to go back onto the payroll and are eligible for the scheme, but the condition there is that they must have been on the payroll as of the 23rd of September. So if someone was on it then and has since been made redundant, you can get them back if you can come to sort of agreement, and yeah, they're eligible for the scheme as well. Something that has changed about the scheme is that employees can actually work elsewhere. So just because they've been furloughed with you, they can seek work elsewhere, and that's absolutely fine as long as it doesn't breach the contract between you and your employee. Then yeah, that's fine. And as per the first furlough scheme, you can still top up your employees' claim. So although it's 80% from the government, you can top it up if you want to, but that will be at your cost. Nothing will be subsidised by the government for that. And the scheme ends in March 2021. So the 31st of March will be the last time that this goes through. In terms of the interruption loans and the bounce back loans, so the CBILS and the bounce back loans, the deadline for that has been extended to the 31st of January. So it's now given a lot more people to get their applications in. But with working with lenders quite closely, what we're seeing is that the turnaround time has increased drastically. So whereas lenders that we worked with typically would turn stuff around in 24 to 48 hours, we're now being told applications won't be going through for sort of 3 to 4 weeks. Now, what we don't know is whether that will stand up as to why people have missed the deadline. We're not quite sure of that yet. But I would say that if you haven't made an application, don't sit and wait. If you do plan on making one, get that in as soon as possible, just so you don't potentially miss that deadline. The rates that we're seeing are around about, well, they're about between 2 and 11% when you factor in the high street banks. If you strip them out and you go to alternative lenders, we're looking at around 6 to 9%. The reason for that is just that, if the banks aren't prepared to fund it and you have to go to an alternative lender, there tends to be more risk, and therefore the interest rates are slightly higher. But again, I wouldn't, they're still very low in the grand scheme of things. So I wouldn't let that deter you from making an application. Something that has come up quite a lot with our clients is that a lot of people are unaware that you can actually have multiple CBILS or interruption loans. So you can stack them across different lenders. So, well, as long as the criteria allows you to. So, for example, a business that has £2 million turnover, they're allowed to borrow 25% of that, so £500,000. Now, the threshold for personal guarantees on that is 250,000. So what you could look at doing is spreading that across 2 different lenders and have £250,000 across both of them, in which case you're still under the personal guarantee threshold, but you've managed to secure your 500,000 that you were eligible for. And you can do that as many times with as many lenders, as long as you are sticking to the CBILS conditions, which is 25% of turnover and a few other things. So yeah, bear that in mind that you can go to multiple lenders. What you won't be able to do though is go to the same lender for an additional CBILS. They will look to just stack it, in which case you'll breach that personal guarantee threshold. As far as bounce back loans are concerned, it's still 2.5% for bounce back loans across the board, no matter who you go to, no matter what lender you go with. But what you are able to do now is top it up from the original facility that you had to what the maximum you could have had. Now that's if you didn't take the maximum. So the maximum was the hire of 25% of your turnover or 50,000. So, you know, if you only applied for 30,000, but you could have technically applied for 50,000, you are allowed to now make up that difference. But the condition on that is you are only allowed to do it once, and it has to be for a minimum of £1,000. In order to do that, it should be on the your bank's on the online website. They'll have a portal that you can log in and make that top-up application. If you can't see it, just get in contact with them. They'll be able to point you in the right direction. It's live now, so yeah, that's up and running. I guess what happens if you've made these applications but you've run out of money and you can't get another CBILS or other funding, there are other types of finance out there. There are other methods that you can go down to secure finance. But one thing to bear in mind is it will be incredibly difficult away from this government help. What we're seeing is that the unsecured funding market has pretty much gone. It's now either the CBILS or bounce back loan. And if you're not eligible for that, then it's the secured route, which means they're securing it on an asset or, you know, a debtor book or something. Yeah, the older unsecured lending market is pretty much non-existent. And something to bear in mind, I guess, from me is that it's not just about loans. A lot of people are hearing that as soon as we talk about finance or the government help, all people care about are loans, but that isn't always what's out there. I've been pushing people to consider invoice finance a lot because that is more forward focus as opposed to sort of the right now. You know, when we come out of this, hopefully soon, businesses are not going to want to part with their cash just in case, you know, something like this happens again. They're not sure. So rather than taking out a big chunk of finance now and spending it and then having to deal with those repayments, invoice finance is going to allow you to have that steady working capital going forward in a time where people aren't, you know, wanting to part with their cash. And especially if you've got higher debtor books, if you're struggling to get that money and when you already have those debtors, invoice finance can look backwards as well. So you know, we could look at a lender that could just come in and fund sort of 90% of that in one hit, which I imagine would be a massive help to a lot of businesses. So yeah, bear that in mind. And other than that, there aren't really any updates. So yeah, that's it from me.
Okay, and John, you've obviously been doing a lot of communication via vlogs and articles regarding the FCA test case on business interruption claims, which caused absolute carnage when this all first kicked off. What's the latest on that?
Well, good evening, everyone. It seems to have been dragging on for a long time, but as I predicted in April this year, I thought that the FCA would take action against insurers because the FCA hates two things: uncertainty in the market, and it wants to ensure that customers are treated fairly. It didn't think that insurers were treating customers fairly, and it didn't like the uncertainty caused by the 78 different types of business interruption policy that were out there. So what it did was it took proceedings standing in the shoes of a policy holder against 7 insurers who each had between 3 and 4 policy wordings, and basically acted as the policy holder. There was a framework agreed between the FCA and insurers as to how this should operate, but after that, gloves were off. The FCA really did argue against insurers at every possible opportunity. And the outcome of the first instance decision heard by Lord Justice Flo and Lord Justice Butcher was very positive for the FCA. They won about 75% of the case. So the policy of the 27 policy wordings, those were picked because they were typical of all of the policy wordings out there. They won 75% of them. But that's not to say they won the whole case. That's not right. A company called Ecclesiastical, who had 3 policy wordings under examination, they found that Lord Justice Flo found that there was no cover. In relation to Zurich, they had 4 policies under examination. They found that just 1 policy responded. However, the situation was very different the Hiscox, who, as we all know from their adverts, pride themselves on paying 90% of all claims, etc., 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 and therefore have wide policy wordings. And unfortunately, Hiscox were found to be, or rather fortunately, were all their policies had cover. Now, surprisingly enough, and there was this in the framework, everyone's appealed. It's leapfrogged the Court of Appeal and has gone straight to the House of Lords. And the case was heard for 4 days earlier this month. Everyone who wanted to appeal got leave to appeal. So the FCA wanted to appeal a couple of decisions, but those that walked away, if you like, from the insurance company side obviously haven't appealed, and the FCA haven't appealed against them either. So Ecclesiastical have walked away. Zurich have said, look, we're not going to appeal. They must have done the maths and thought, right, we've got to pay out on one type of policy wording. Okay, we can live with that. But obviously the likes of Hiscox have appealed because potentially it could finish them. It is £2.1 billion worth of claims. So that case was heard earlier this month, and the law lords have said they're going to put their heads together and try and get a decision out by mid-December, but have said it may well be January before we do. The reason for this is that this is very much new law. There was only one case, the famous New Orleans hotel case, where this situation has really been looked at closely. Now, Lord Justice Furlough has said that the case was decided wrongly, and I dare say most of the insurers are saying, no, that case was right, Lord Justice Furlough is wrong. So it turns on that. However, what you should be doing now is, and I've said this right from the very start, anyone that has any policy that mentions government intervention or infectious disease, pandemic cover should have their policy checked. It's probably too late if you took out a policy after about mid-Feb of this year, but if you took out a policy, any form of business interruption cover in January, for example, have it checked. There is now a template to compare your policy against, being the first instance decision. I'd probably wait until the House of Lords decision is out, but I'm not going to suggest for 1 minute it's going to change a huge amount of things. It's not really. And you should be ready to make your claim. And I'm sure that Darren would agree with me that you should be preparing your business interruption losses so that you're ready to make your claim. The only slight problem is that only 27 policy wordings were tested. Now, whilst they covered the generic type of clauses, if you're the other, oh, my maths is terrible, 78, 27, 56 or so policies, they will all differ in some slight way. But there's no doubt in my mind that you should have your policy wording checked if you've got any type of coverage for that, and you took it out before January of this year. You should be having that checked. And it will not be a lot. It's going to your lawyer and saying, here's my policy wording. Can you get a barrister to compare that against the judgments? And the barrister should be able to come back to you relatively cheaply and say, there's cover for this, there's cover for that, or there isn't any cover. But one thing you're going to have to do, even if there is cover, is prove your loss. Darren would be the first, I'm sure, to agree with me that you must have kept good records and that you must be prepared to demonstrate to the court what losses you have suffered. Am I right on that, Darren? I think.
Yeah, absolutely. One of the things we're seeing people fall down on in a number of things, not just insurance claims, but raising finance as well, just everything, is that records aren't up to date. And it's the easiest thing to just throw something back at someone and just say, yep, not up to date, so we can't look at it. So yeah, up to date financials are key.
Okay, and Richard, contractually wise, what should contractors be aware of or making sure they're doing in terms of record keeping? What the important things that they need to prove that a delay was caused by COVID, and or if they have a cladding issue, what would your top tips be?
I don't think you can have too many records. What you need to understand is what is the other party going to argue against? And the reality is everything. They will not accept anything. So I think the best record, which people don't use enough, in my view, is photographs. Recording what progress is going on sites, or even what works are not going on site. As far as all your labour and resources, plant returns, day work sheets, everything of that nature, keep a record. You cannot keep too many records. I've been dealing with this 30 years. And in the 30 years I've been doing it, I don't think I've ever told a party you've got too many records. What I have said in nearly every circumstances is you haven't got enough. And why didn't you do this? So I would suggest, keeping records, and indeed, it could often be good value to spend more money and to employ someone who is purely being employed to keep those records, including their own time. So I would say photographs, day sheets, timesheets, everything of that nature, where people are working, what they're doing. The more information you got, the better position you will have.
Okay, I know from some of our seminars we have templates for site diaries and an ideal checklist, an ideal one which we should have. So we're always happy to share those with anyone that's listening that would like copies of those. And indeed, Darren, I believe that Nordens have on their website a series of templates for similar sort of thing from the finance side.
Absolutely, yeah. We've got sort of financial health packs that people can download.
Okay. John, in terms of insurance, aside from actually reading the insurance document, which is something you have mentioned once or twice before.
Once or twice, yes. Read your policy wording. Yeah, very important.
Okay. In terms of preparing a claim, is there any advice that you can give, or again, top tips, that things you should include, not include?
I'm afraid it's very much the same as Richard's. The more you can show to justify your loss, the better.
Right.
I've stressed this right from the start of doing the vlogs, that finding the fact that there is cover under your policy is only one step. Insurers will fight this tooth and nail. And therefore you need to have as much records as you can of what losses you suffered directly resulting from COVID-19.
Right.
Okay, so you really do. And you've also got the other duty, which I think people sometimes forget, which is to mitigate your loss. You can't just shut up shop on the assumption that I've got some insurance cover. That's not how it works. You've got to continue to try and trade to the best of your ability to mitigate the losses that you're suffering as a result. So many pubs, I think, have just decided we're going to shut the door. Well, that may affect their claim, because insurers will say, well, you could have done takeaways. Why weren't you doing takeaway beers? Why weren't you doing takeaway dinner? Why weren't you doing this? Just shutting shop, whilst I suppose the economics have to come into it about whether it's viable to keep open, whatever, but you've still got to try. And I think people will have made the mistake of just thinking, well, there's nothing we can do, and shutting, whereas the more inventive businesses have tried to maintain some sort of revenue, and they will do better out of this, I have no doubt. But the more records you can keep, the better, without a shadow of a doubt.
Too much is better than none at all.
Absolutely.
Okay, and I know, Darren, when I was talking to Joe Sword from Nordens the other day, we were doing a vlog, which is on our website and on our YouTube. He was saying that, you've seen a lot of your small businesses who've found the ability to pivot and increase or widen their offer in a way they hadn't possibly thought of before. I know he's strongly recommending that, isn't he? Looking at your business model and...
Absolutely. That's one of the first things we recommended to people, is kind of take this as an opportunity to look inwards about how you can pivot, become leaner. That's what we've seen. A lot of businesses become leaner and kind of stripped out costs. Unfortunately, some people stripped out staff, but they're able to still operate exactly the same, and they're a lot more efficient. And like John was saying, is that, why didn't you do takeaways, for example, for a pub? Look at doing things that you weren't doing before as an offering. a really silly example is we've got a client who's a gym, but now he's moved to a completely online platform, still delivering his fitness classes. So it's a way that he's been able to mitigate his losses. And touching on what John said as well, is that one of the first questions I get when I am dealing with lenders and making applications is, what did the business do to mitigate losses?
Yeah.
If they find that a business has just kind of rolled over or shut up shop, it screams risk to the lender, that they're just not prepared to that if things do go belly up, they'll just fold and the lender won't see their money. They want people that are going to push to try and at least pay the money back, you know. So yeah, it's one of the first questions we do get.
Okay.
Just seeing there a sales opportunity. Obviously, you're all listening to us online. Prior to COVID, I don't think I'd ever done any seminars online. Now it seems to be the matter of course. And indeed, Julie, one of the main things she's doing now is the amount of interest we are finding from organisations wanting courses online for their staff, because obviously the cost is much easier. They don't necessarily have to bring everybody into the office now. It can be done at times that are suitable to staff, and any topic can be covered to match exactly what that particular client wants. So for those of you who are interested in lectures online to particular topics, obviously please do speak to Julie and we can organise something to suit your exact requirements.
Indeed we can. That's not a problem at all. Okay, I don't know if we've got any questions from the audience yet. Everyone seems very quiet and listening to what you've all been saying. In terms of, Darren, the March end to furlough, do we think that will be pretty much it?
I don't see how they can extend it again. I mean, they've extended it enough times now, and I don't want to eat my words because I really want us to come out of this, but I just, you know, it feels different this time, and it feels like we are coming out the other end of it. You know, towards Christmas, they're relaxing rules. You know, there's the vaccine that they're talking about, and I just don't think that come, you know, April next year, we're going to be in this position. So I really don't think there's going to be anything extended for any of the schemes, to be honest. We'll see. They might bring out a new scheme that is kind of a recovery thing once we're out the other end. But yeah, I can't see furlough being extended.
Okay, and I know, Richard, you are the adjudication king. That's obviously most of that is now being done online and has been for the last 8 months. Are you finding that a very different process? Is there anything that people are doing differently or need to do differently in preparation for that, bearing in mind it's in a very different format as opposed to face-to-face?
To be honest, most adjudications generally did not have meetings. I think the biggest difference is that previously people would be sending hard copies of documents, whereas now the people are using things called Dropbox and other things I'd never heard of before, which even I have mastered and have been able to download. What I think is clear is money, and I think Darren's already pointed towards this, money is tightening. And I am seeing far more calls now from people looking into old accounts, or also being advised that retentions that were being due to be released aren't. People are setting off for alleged defects for retentions, other factors that is hitting the supply of money. And what I would suggest is you know, he who shouts first is most likely to get the money. If you leave it too long, there is always a danger that the person who owes you money won't be there. So my advice is to ensure that interim payments are paid to you on time, and if they're not, look into the reason for non-payment. And one of the reasons is likely to be that the other party doesn't want to pay. Decide whether you need to take action today or can afford to wait a few months. So do be careful.
Yes, and I think going forward, there's two things. I think Darren said, you know, people are nervous about this happening again. You know, we do need to learn the lessons from history. We had SARS in 2002 and 2005, which was very dangerous. George Bush, not necessarily someone that we particularly admired, he gave a very good speech, and the way he talks, it will happen, and we need to be prepared. So going forward, people need to look at their contracts and there are proper force majeure clauses in there. in terms of their insurers, we're in the hardest insurance market I have ever known. So you will not get the same coverage that you had last year. You need to really read that policy wording this year to see what you are covered for. The word cladding is just not going to be in there. So you need to make and try and agree some sort of, I don't know, on construction projects, some sort of risk, I don't know, splitting in terms of that, because cladding is just not going to be there. I don't think people have realised this yet. It's just excluded. It's gone.
I think I would add to that, John. It has always been the case that people do not take the formation of contracts as seriously as they should. Employers, yes, there are standard forms, but you will be aware that it is very rare that a standard form is unamended. I still believe that quite often parties choose the wrong standard form. You know, we've got a whole suite of JCT and NEC, but I don't always think that the parties choose the right one. Dare I say it, I think certain consultants are mindful of their own interests rather than the employers when considering design and build against the traditional form, and point to the more traditional form because they'd rather be employed by the employer and not by a contractor through an ovation agreement. I think that when the contracts are amended, all too often, all that's considered is certain risks, but they don't look into the procedures that will apply to the particular project. So I think further works need to be done on that. So far as main contractors and subcontracts being in place, I think they're even worse. The amount of subcontracts that I've been able to get out of in past gone years surprises me, in that they're simply not put together well enough with regards to sequencing of works and such matters. So if I was going to give any advice, any employers, contractors or subcontractors, ensure you fully understand what you are signing up to and that it meets your requirements if you're the employing party. And if you're not, and you're the employed party, make sure you're not signing up to something you are unaware of. Because just one contract, we know it's very difficult to make 5% profit, but it is extremely easy to incur 100% loss. So that is another area I'm finding quite a lot, is parties asking me to draft contracts and or to vet contracts. But I am concerned to a certain degree the advice that is given to employers by consultants.
I'm also equally concerned that there is, because premiums for construction industry have risen so much, I'm very worried about the general clause in JCT, which says if insurance is commercially available. I'm getting very worried about that because the prices are so high now. And what do we do as an alternative? I mean, I don't know the answer, but it's in a standard JCT contract. I mean, an increase in premium over 3 or 4 years of 6 times? Is that commercially available? I don't know.
I think the other thing, just for those of you who are consultants, I do see more employers considering actions against consultants for not properly advising them on the contracts as well. Quite often they're looking to go after the contractors in the first instance, but if there is any problem, particularly if the contractor is not there, then the next step is to go after the consultants in full knowledge that they have professional indemnity insurance in place.
Absolutely.
And what you have to ensure is that what have you advised them at the start? What is the form of contract you've advised upon and why? Have you given them the necessary advice? And particularly where I'm seeing so many construction sites, as has always been this case, starting on the basis of letters of intent or where contracts have not been signed until well after the job has been commenced, and in some circumstances after the contract has been concluded and finished. So again, consultants, do be aware of the dangers that an action can be taken against you for breach of contract and or negligence.
And as well, the fact is that now you will have less insurance cover. It will not cover what you had last year.
And on that happy note,
Thank you for that, gentlemen, and that sage advice there. Generally, the thing seems to be between the three of you: records, 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 which is a common theme I know from both Richard and John in their seminars, and indeed Darren is stating the same thing. There is no such thing as too much information, so hopefully everyone's going to take that on board. We don't seem to have any questions, so unless there is anything else you'd like to add on anything at all, we will have all your contact details up on the website and indeed with the emails that go out. We do have our final event for next year, for this year rather, sorry, which is the impact of COVID on the property market, which is being hosted by property partner Michael Shapiro next Thursday at 4 p.m. So if anyone listening would like the login details for that, please let me know. seminars@silverllp.com. And as always, both John and Richard can be reached via their emails, richardsilver@silverllp.com and Jon Sharp, that's John Jon Sharp @silverllp.com. And Darren, yours is, I believe, dh@strategic.-Nordens.
Yeah, it's dh@nordens-strategic.co.uk.
Brilliant. Okay, we will make all of that information available. So if anyone wants to get in touch directly about any of the issues that we've been discussing tonight, they can certainly do so. I know that all three of you are happy to field any specific queries. Gentlemen, it only remains for me to thank you very much for your time and your expertise and sharing that with us. And we look forward to hearing from you all again soon. So thank you very much. Good night, everyone. And don't forget to email us if there's anything you'd like to know.
Good night, Julie. Thank you very much. Good night, Darren.
Thanks, guys.
Thank you.
See ya.
Good night,
Bye.
Thank you, Richard.
Take
Take care. Good night, everyone.